If you're someone who is thinking about buying a house and applying for the NACA Mortgage Program in order to finance that acquisition, watch this video because in this video, I'm going to go over some of the downsides to the NACA Mortgage Program, as well as some alternative loan programs that you can apply for just in case if you're eager and ready to jump into home ownership right now. Now, NACA advertises no down payment, no closing costs, no mortgage insurance, and no consideration of your credit score, meaning if you have a low credit score in the 500s or 600s, you'll still be able to get a low interest rate on your home loan when you apply. Now that sounds amazing, but what's the catch? Well, with the NACA Mortgage Program, some of the catches are you must live in the home for as long as you have a NACA mortgage. You cannot have any co-signers on the home loan with you, and you must meet the minimum or maximum debt to income requirements in order to be eligible for this program, just to name a few. So again, in this video, I'm going to go into the details on the catches of the NACA Mortgage Program so that you can be best prepared or have an alternative and finance the future home of your dreams. Now, my name is Art Smith, MLS number 2013410, and on this channel, we talk about personal and real estate finance in order to help you build wealth. So if you're new here on my channel, subscribe and please do me a favor and tap that like button so that YouTube knows that this is good content and can be shared and distributed to more people just like us. Now let's jump right into the downsides of the NACA Mortgage Program. Okay, so the first downside to the NACA Mortgage Program is going to be the low debt to income ratio requirements. Now, if you're not familiar with the term debt to income ratio or debt to income ratio requirements, this is going to be a formula that all lenders use in order to determine if you are eligible for a loan approval. NACA's DTI or debt to income ratio requirements on the front end is going to be 35% and on the back end is going to be 43%. Now, to best illustrate what this means, I'm going to use an example of an individual who is earning $10,000 per month. Now, if you earn $10,000 per month on the front end, NACA Mortgage's DTI ratio is going to be 35%, meaning your housing payment cannot exceed 35% of your overall income. So for simple math, 35% of $10,000 is going to be $3,500. And that's going to be the maximum amount of mortgage that you could qualify if you earn $10,000 per month. So on that front end ratio of 35%, your principal, interest, taxes, and insurance, also known as your mortgage payment, cannot exceed $3,500 per month. And on the back end ratio, NACA's requirement or maximum DTI is going to be 43%, and that's going to be inclusive of your mortgage payments or your estimated mortgage payment, plus any debt that's found on your credit report, like your student loans, auto loans, personal loans, and credit card payments, and any other debt. So again, as an example, 43% of $10,000 is going to be $4,300, and that's going to be your maximum allowed debt in order to qualify for the NACA Mortgage Program. So your principal, interest, taxes, and insurance, plus your auto loans, student loans, personal loans, and credit card payments cannot exceed $4,300 in this example. And of course, if you make less than $10,000 per month, then those ratios are going to shrink. So let's just say if you and your spouse together make $5,000 per month or $60,000 per year, 35% of $5,000 is $1,750. So that's going to be the maximum allowed mortgage payment via the NACA Mortgage Program. And on the back end ratio, 43% of $5,000 is $2,150. So that's going to be the maximum allowed debt on the NACA Mortgage Program for your estimated mortgage payment, plus all of the consumer debt that's found on your credit report. Now, these DTI ratios or requirements for the NACA Mortgage Program are very low, making it very difficult for homeowners across the U.S. to qualify for a home loan with the NACA Mortgage Program, especially with interest rates being so high right now. And if you can't meet the NACA DTI requirements, well, unfortunately, you will not qualify for a loan, so you can't buy the home of your dreams. So a great alternative to the NACA Mortgage Program is going to be the FHA 3.5% down for first-time homebuyers and non-first-time homebuyers. With the FHA loan, your DTI requirements on the back end bumps up to 56% as opposed to 43%, making the FHA program a great alternative to the NACA Mortgage Program. Now, you may be thinking, well, I like the NACA Mortgage Program because I don't have to pay a down payment and potentially even closing costs. Well, with the FHA program, you could couple that with a down payment assistance program that will help you with the remainder of the down payment as well as the closing costs. So you do have options that you could take advantage of. Now, if you want more information on down payment assistance programs, do me a favor and comment the word down payment assistance or DPA in the comment section below so that I know that you're interested in this type of information and I can create separate videos that talk about down payment assistance programs in combination to FHA loans or any other loan program out there. So again, comment the word down payment assistance or DPA in the comment section below, and I'll make sure that I create more content around that specific specific subject matter. Now, the second downside to the NACA mortgage program is that non-owner occupied co-borrowers are not allowed on this home loan program. Now, this is also known as co-signers, especially since DTI ratios on the NACA mortgage program are very low. Some borrowers need the help of a friend or family member in order to qualify for this program, given that the DTI ratios are so low. And since the NACA mortgage program doesn't allow co-signers, well, unfortunately, you're not going to be able to get approved for this program. So if this is you and your debt to income ratio requirements are too high for the NACA mortgage program, and you need a co-signer in order to get a loan in order to buy a house, great alternative programs for this situation is going to be the FHA home loan program. Again, 3.5% down with down payment assistance or without down payment assistance, as well as a conventional loan, 3% down for first-time home buyers or 5% down for all other home buyers. Now, the reason why I added the conventional home loan option to this is because via the FHA home loan program, you're only allowed to have 2 co-signers on the loan with you. However, with the conventional home loan program, you could have 2, 3, 4, 5, 6 co-signers on this home loan program with you in order to qualify for a home, making the conventional home loan option a really good option for individuals who have this hurdle or obstacle in front of them. Now, the third downside to the NACA mortgage program is that you must maintain occupancy for the life of the loan, meaning you must occupy this home as your primary residence for as long as you have a NACA mortgage. So you technically can't move out in the future and then turn it into an investment property. You cannot move out of this home and then move your family into this home via the NACA mortgage program. You must live into the house as long as you have the NACA mortgage attached to this home. So for a lack of better terms, that kind of sucks, because if you wanted to move into a bigger house and then turn this home into an investment property or give it to one of your kids in the future, unfortunately, you cannot do so because that is forbidden with the terms and conditions of the NACA mortgage program. And by the way, the reason why this restriction exists on this program is because this program is tailored for individuals who intend to occupy a home as their primary residence. This program promotes home ownership, and they want to steer away from real estate investors who are intending to use this program as an investment property either now or in the near future. So if you're one to think ahead in the future and you're planning on just using this home temporarily and then moving into a bigger home in the future, unfortunately, you will hit a speed bump and obstacle with this home loan program, and you're going to have to refinance out of this and into a different home loan product in order to get another primary residence. And unfortunately, that's going to be very cumbersome and cost you a little bit of money in the future in order to refinance out of this mortgage. So again, if you're one to forecast the future and you know you're going to move out of this home and into a bigger home in the future, then it's probably best to go with a different home loan program like the FHA or conventional home loan. Now, I do have to add that there is a workaround. Let's just say if you use the NACA mortgage program to purchase a 2, 3, or 4 unit, well, technically you could maintain occupancy in one of the units and then rent the other 1, 2, or 3 units out. So do keep in mind before you jump ship from NACA into a different home loan program. Now, the fourth downside to the NACA mortgage program is going to be longer than normal approval times. Unfortunately, in order to qualify for the NACA mortgage program, you must go through an online or in-person workshop, as well as go through the mortgage counseling via the NACA mortgage program. And this could take up to 6 to 12 months in order to qualify. So if you're someone who's looking to buy a house in the next 180 days or sooner, unfortunately, the NACA program is not going to work for you. Now, one of the primary reasons the NACA mortgage program takes so long is because of something called payment shock. And this is going to be the difference between what you're currently paying in rent versus what your estimated mortgage payment will be. And whatever that difference is, NACA is going to want you to put the difference aside into a separate bank account and let that difference season for at least 6 to 12 months so that they are confident in you that you could handle the new projected estimated mortgage payment. And if you're currently living at home with family and you don't pay any rent, unfortunately, you're going to have to save the estimated mortgage payment for the next 12 months into a separate bank account and not spend any of that money. So if you fall into one of these scenarios and you're looking to buy a home now, unfortunately, the NACA mortgage program is not going to be the best suit for you. So then your next best option is going to be a conventional loan, because they don't have to deal with the payment shock requirements that the NACA or potentially even an FHA loan will make you go through in order to qualify and get a loan approval. And the last downside to the NACA mortgage program is that your offers are going to look less attractive to sellers when purchasing your very first or next property. And the reason why they look less attractive is because sellers as well as sellers agents don't really know and understand the NACA mortgage program. So what happens when a new home hits the market? Typically, a seller will receive 2, 3, or 4 multiple offers on that property. And if one of those offers are your offer with a NACA mortgage, well, unfortunately, that seller and seller's agent will overlook your offer and look to the other offers that have traditional financing attached to their offers in order to find the best buyer that could close on the property. Now, unfortunately, this is out of your control and you can't do anything about it. However, if you are submitting offers on properties and you just keep getting rejected over and over and over, the next best option for you is going to be switching loan programs into an FHA home loan or a conventional home loan in this situation. Well, all right, guys, that's all I got for you in this video. Hopefully you learned a thing or two about the NACA mortgage programs as well as alternative loan options, just in case if the NACA mortgage program doesn't work for you in your situation. If you have any questions, comments, or suggestions that's related to this video topic, be sure to drop them in the comment section below. And if you're someone who has a situation or scenario and you don't want to make it public here on YouTube, feel free to send me your situation and questions via email, and I will list my email in the description box below this video. Now, again, my name is Art Smith, MLS number 2013410. If you haven't done so already, do me a favor and subscribe to the channel. And if you found value in this video, do me a favor and tap that like button. Thank you so much for watching this video, and until next time, goodbye for now.